There's a vault beneath the streets of London that holds more gold than most countries will ever see. Not a government vault, not a central bank, a private company. And if you tried to find out who really owns what's inside, you'd discover something unsettling. The records are sealed. The ownership is layered. And the gold? It never moves. For over 3 centuries, this system has survived revolutions, world wars, and the collapse of empires. It doesn't advertise. It doesn't need to. Because while nations rise and fall, the gold stays exactly where it is. And the people who control it? They've mastered something far more valuable than wealth. They've mastered invisibility. Welcome to the Wealth Timeline, where we uncover how money, power, and history are woven together to shape the world we live in. Today, we're following a trail that leads from the coffee houses of 17th century London to the vaults that quietly underpin the global financial system. This is the story of an empire built not on land, but on trust. And it's still here. Let's start with a question most people never think to ask. Where is the world's gold? You might imagine Fort Knox, or the Federal Reserve, perhaps the vaults of Switzerland or the reserves of China. But the largest concentration of gold outside government control sits beneath the City of London, a single square mile that operates under its own laws, predating even the British Parliament. And much of it is held by institutions you've probably never heard of. Bullion banks, custodians, clearing houses with names like LBMA, the London Bullion Market Association. These aren't just storage facilities. They're the invisible infrastructure of global wealth. The system that decides what gold is worth, who can access it, and how it moves between nations without ever leaving the building. But this system wasn't designed by governments. It was designed by merchants. And it began long before anyone thought to regulate it. The year is 1694. England is broke. Wars with France have drained the treasury. The government needs money, fast. But there's a problem. Nobody trusts the king. Charles II had defaulted on his debts just 2 decades earlier, seizing gold from merchants and leaving them ruined. Lending to the crown was financial suicide. So a group of wealthy merchants proposed a deal. They would lend the government 1.2 million, a staggering sum, but only if they were granted a royal charter to operate as a private bank. Not just any bank, the bank. The Bank of England. And here's the genius. The loan would never be fully repaid. Instead, it would become a perpetual debt, with the bank collecting interest forever. In exchange, the bank gained the right to issue paper notes backed by gold. Notes that could circulate as money. For the first time in history, private debt became public currency. And the merchants who controlled the gold controlled the system. But this was just the beginning. The goldsmith revolution. Before central banks, there were goldsmiths. In the 1600s, goldsmiths were the original custodians. Merchants would deposit gold with them for safekeeping and receive a paper receipt in return. Over time, people realized something. You didn't need to withdraw the gold to do business. You could just trade the receipt. The goldsmiths noticed something even more valuable. Most of the gold just sat there, so they began issuing more receipts than they had gold. This was the birth of fractional reserve banking, and it worked until everyone wanted their gold back at once. The goldsmiths who survived this chaos evolved. They became bankers, and the most powerful among them formed networks, syndicates, and eventually clearinghouses. By the 18th century, London had become the center of global gold trade. Not because Britain had the most gold, but because it had the most sophisticated system for moving it without moving it. Ownership could change hands a dozen times in a day. But the gold? It stayed in the vault. And the families who controlled those vaults became the unseen architects of the British Empire. The Empire of Paper. As Britain expanded across the globe, so did its gold network. Colonial governors, merchants, and trading companies all deposited their wealth in London. The city became the clearinghouse for the world's commodities, gold, silver, cotton, spices, opium. But here's the hidden power. Britain didn't need to own the gold to control it. As long as the gold was stored in London, and as long as transactions were settled in pounds sterling, Britain effectively controlled global liquidity. This is why the British Empire could finance wars, build railways across continents, and dominate global trade, not through military force alone, but through financial architecture. The gold standard formalized this. Under the system, every major currency was pegged to gold, and every major gold market settled in London. If you wanted to trade internationally, you had to go through London. If you wanted to borrow, you went through London. And if a country ran low on reserves, London decided whether you got a loan or a crisis. The syndicates. By the late 1800s, a handful of merchant banks dominated this system. Rothschild, Barings, Schroders. These weren't just banks, they were dynasties. The Rothschilds, for example, controlled gold refineries, bullion markets, and the pricing mechanisms used by central banks. They set the daily gold fix, the benchmark price used worldwide, in a private meeting that lasted exactly 15 minutes. No oversight, no regulation. Just 5 men in a room deciding what gold was worth. And this wasn't a conspiracy. It was simply how the system worked. Because when you control the price, you control the market. And when you control the market, you control the empires that depend on it. But this power came with a cost. The first crack. The gold standard worked beautifully, until it didn't. World War I shattered the illusion. Governments needed to print money to finance the war. But under the gold standard, they couldn't print more than their gold reserves allowed. So one by one, they abandoned the standard. Britain, the architect of the system, went off gold in 1931. The United States clung on until 1971, when President Nixon closed the gold window, ending the last link between the dollar and gold. And just like that, the system that had governed global finance for over 2 centuries vanished. Or did it? The hidden continuity. Here's what most people don't realize. Even after the gold standard ended, the infrastructure remained. The vaults, the clearinghouses, the daily gold fix, the custodial networks. Gold was no longer money, but it was still the ultimate reserve. Central banks still held it. Billionaires still hoarded it. And when crises hit, investors still fled to it. The difference? Now it was invisible. Governments stopped reporting their gold transactions. Bullion banks stopped disclosing their holdings. And the market became a shadow system. Vast, liquid, and almost entirely unregulated. By the 1980s, gold trading had become a paper market. Futures, options, ETFs. Instruments that let you bet on gold without ever touching it. For every ounce of physical gold, there were dozens of paper claims. And the people who controlled the physical gold, they controlled the game. Who lost? When the gold standard collapsed, entire economies were reshaped. Countries that had pegged their wealth to gold found themselves adrift. Currencies fluctuated wildly. Inflation surged. And those without strong financial systems fell into debt spirals. The developing world especially was hit hard. Nations that had tied their exports to stable gold-backed currencies suddenly faced volatile exchange rates and capital flight. Meanwhile, the institutions that had built the gold standard, they adapted. Who won? The merchant banks of London transformed into investment banks, asset managers, and private wealth custodians. They no longer needed empires. They had something better: networks. Today, firms like HSBC, JP Morgan, and UBS act as custodians for central banks, holding gold on behalf of nations that prefer not to store it themselves. Why? Because moving gold is expensive, risky, and slow. It's easier to leave it in London and just update the ledger, and so the gold stays. In the same vaults, under the same streets. The names have changed. The laws have evolved. But the system, it's still there. The silent heist. In the 1990s and 2000s, central banks across Europe began selling off their gold reserves. Britain sold half of its gold between 1999 and 2002, at the lowest prices in 20 years. Critics called it Brown's bottom, after then-Chancellor Gordon Brown. But here's the question nobody asked. Who bought it? The transactions were private. The buyers were never disclosed. And the gold? It never left London. It simply changed hands. On paper. The return of gold. Fast forward to today. After decades of decline, central banks are buying gold again, aggressively. China, Russia, India, Turkey, all are accumulating reserves at record pace. In 2023 alone, central banks purchased over 1,000 metric tons. Why? Because trust in the dollar is eroding. Sanctions have weaponized the financial system. And gold, once again, represents sovereignty. But here's the irony. Much of that gold is still stored in London, or New York, or Switzerland. China holds an estimated 2,000 tons of gold. But nobody knows how much is stored domestically versus in foreign vaults. Russia tried to repatriate its gold before the Ukraine invasion. Smart move, since Western sanctions froze 300 billion of its reserves. But most countries? They leave their gold exactly where it is, because moving it would signal distrust. And in the world of central banking, appearances matter. The invisible empire today. The London Bullion Market Association still sets the global gold price, twice a day in a private auction. The Bank of England still holds more foreign gold than almost any institution on earth. And the custodian banks, HSBC, JP Morgan, ICBC, still control the flow, the storage, and the settlement of nearly all physical gold traded globally. This isn't a conspiracy, it's infrastructure. But infrastructure built by private hands, for private interests, that just happens to underpin the entire global financial system. And if you wanted to dismantle it, you'd have to replace it with something just as trusted, just as efficient, and just as invisible. Nobody has. The final revelation. So here's the answer to the mystery we started with. The secret empire that still owns the world's gold isn't a single family, or a government, or even a cartel. It's a system. A network of vaults, ledgers, and institutions that have survived every revolution, every war, and every financial collapse. Not by fighting change, but by becoming indispensable to it. They don't own the gold. They own the access to it. And in a world built on trust, access is everything. 3 takeaways. First, gold never stopped being money. It just stopped being visible. Second, the most powerful systems aren't the ones we debate. They're the ones we forget to question. Third, empires don't end. They evolve. And the ones that last are the ones we never see. For over 300 years, a small network of institutions has quietly controlled the flow of the world's most trusted asset. They've survived monarchies, democracies, and revolutions. They've outlasted empires that once ruled half the earth. And today, as nations scramble to secure their gold reserves and central banks race to repatriate their wealth, the system remains silent, efficient, and utterly essential. Because in the world of wealth and power, history never ends. It just changes hands. If you enjoyed uncovering this hidden chapter of history, don't forget to like this video. Subscribe to the Wealth Timeline and turn on the bell icon. Because the next story might just rewrite what you thought you knew about power. Thanks for watching. Stay curious, and remember, the most important stories are the ones nobody talks about. Until next time.